good story. I was in Spain in 2008. I moved to Spain 2005 and was there up until 2014. And writing Global Macro Investor, I was kind of at the epicenter of the financial system. I came from Goldman and this huge hedge fund. I kind of knew everybody. And my analysis led me to forecast that the financial crisis was coming and then the European crisis. And there's all of us at the center of the financial system kind of knowing what was going on, but nobody else did. And it kind of caught people by surprise. I was, in Europe, we almost lost our entire banking system and almost all the sovereign debt blew up. I mean, it was super serious at the time. And I realized that the financial system was broken. There was excessive debts that could never be solved. And I thought, well, what are we going to do about this? I mean, my journey actually bifurcated. I thought I need to educate people, which was the start of Real Vision. But I want to do something about the security of assets, because if we don't own stuff that we think we own, we've got nothing. And the Lehman crisis told us about rehypothecation and the lack of ownership of assets. And then in Europe, when they took your money out of the Cypriot banking system and just gave everybody a haircut when you're supposed to be a depositor, terrified me. And I held it. And it went up 5x in 6 weeks. And obviously I'm now thinking I'm George Soros. I'm probably the best investor the world has ever seen, maybe. And then it falls 85%. But my hypothesis, look, I'm a long-term macro guy, so I didn't really care about that. I treated it like an option. I figured it could go to zero. This is very early days. We had to get through Mount Gox and all of the stuff that we've been through within this space. So I was like, I don't care if it goes to zero. I sized it accordingly, and it fell 85%, but I was still interested in it. And continue to watch it. And then before you know it, 2017 comes along and it's now up 10x from where I bought it. And this was the time of the forking wars. This is when they're trying to fork Bitcoin to different chains. And I'm like, I don't really understand what even this means. We now have a better understanding of how this all works, but we didn't then. And I'm like, I'm going to get out. I've made 10 times my money. It's been a fantastic bet. I'm out. It then went up another 10x. So I got out of 2,000. It goes up to 20,000, right? Which was mind blowing.
Yeah.
But again, I was like, it's fine. But I had a hypothesis that this was not dead. It was going to go through a cycle. It had gone through a hype cycle. It needs to calm down. Again, we fall like 85%. And my hypothesis was that macro and crypto were going to meet, because I came into this space saying we need this asset. And the next recession, once the money printing starts again and the unease over who owns what on NFTs, one is because of you being a CTO, you're a systems thinker. There is no systematic way to understand how people price culture. You would never come up with the price of a Louis Vuitton handbag or a Damien Hirst piece of art. Right, because they're mainly driven by human emotion, greed, tribalism, the desire to feel status. These things are very hard to price. So let's go back to first principles, because that will probably help you understand this. What is it about NFTs that's so powerful? So in a digital world, we have excess of abundance. Think of cloud compute. Think of mobile data costs. Think of anything in the digital world. They essentially go to zero in value. So everything goes to zero that gets digitized because of Moore's law and a bunch of other reasons. Now, that is a huge problem if we're living in a digital world. Here we are on this Zoom call. We're all around the world. It's incredible value because it costs us basically nothing to do on a data network that basically costs us nothing. Right? So how the hell is this all going to work? NFTs stop that. They anchor and create scarcity in a digital world of no scarcity. That's the big breakthrough here. Just because it came from art is irrelevant. It's the digital scarcity in a world where everything else digital goes to zero, creates investable assets. But how do you value these things? Well, how do you value a community? But because we have a scarce supply of these assets, we need to understand some sort of scarcity model as well. So I'm not sure we've yet been able to model those out. So I don't really know the answer yet. which is why I don't invest massively in the space. I have, some NFTs because I'm interested in the culture and where it's going, and it makes me have a skin in the game to follow it. The macro is bloody awful. It's the largest, most concentrated tightening of rates that I think we've seen almost in history. We have the largest tightening of financial conditions on a broad measure, as opposed to, a lot of people use the Goldman measure. That's not that broad because it uses equity markets, and it's a weird kind of feedback loop between equities and that. But if what I did was use the rate of change of rates, the rate of change of the dollar, and the rate of change of commodity prices, and it gives you a understanding of how tight money is. The other way you can look at it is the number of central banks as a percentage of total central banks raising rates. Those kind of things give us a growth shock that is ahead, that we're starting to see, that is quite sharp and severe. So we're talking about something where, GDP growth falls 3% or so. So a really decent sized recession. But it looks like my forward-looking indicators suggest that the bottom of this growth shock comes actually pretty soon, like March 2023. And so if the bottom comes, then you get the recovery side. So, to David Rosenberg's point, it ends up being about 18 months or 2 years, because we probably started some sort of recession at the beginning of this year. So the macro is bad now and is going to get worse. The narrative you will see is, well, the macro is about to get terrible, all assets must fall. But once you start doing things like doing the year-on-year rate of change of the S&P or the NASDAQ, they're actually pricing in an ISM, the Institute of Supply Managers survey, of about 40. So that's pretty severe recession as it is. Could they price in a bit further? Could it be at one lower stab? Sure. But these are forward-looking assets. And what they look for is the turn. Why the turn? Because that's somewhere in the next 6 months, the central banks will most likely go, okay, unemployment's coming up, inflation's coming down. We have to look after, our mandates are unemployment and inflation. Inflation is going to be maybe stickier or higher. I don't believe it will be. I think it actually goes negative. But unemployment is going to be coming up. We need to at least stop. So crypto is really interesting. Same with technology stocks, is they are in an exponential logarithmic uptrend because they are network adoption models. So in technology stocks, we've got the relentless, ongoing, ridiculous pace of rise of AI, robotics, EV, space, Internet of Things, 5G, 6G. Genetic sciences, all of these things are all coming together at the same time. It's the fastest pace of change humanity will ever go through. It's hard enough for us to deal with on societal level, but that's not stopping.